Good morning and welcome back to Almus Market Mornings. It was an expectedly quiet session for the markets as we arrive at the final trading day of what's been a true rollercoaster of a year. A brief period of rupee appreciation was seen yesterday, likely on the RBI intervention to defend the 90 level ahead of the year end, while broader markets largely stayed on pause. But the final agenda item for the year was released of the Fed minutes overnight. Policymakers broadly agreed that the Fed rate cuts could be appropriate over time if inflation continues to ease, though there was some clear division on the timing and the extent of any moves to take place. And the minutes also highlighted that the challenge of decision making because of limited economic data due to the government shutdown, but reinforcing expectations that the Fed may stay on hold in January while waiting for clearer signals next year. Good morning, JK. So, how do you interpret the Fed's message and what do you expect from the markets on the final day of the year, especially across currencies, commodities, and of course the premiums to normalize next year?
Good morning, Eshan. This is the last update for the year from us. And markets are likely to, I think, go into a slow motion in the hours ahead. And in fact, some of the markets like Australia, New Zealand, will, down their shutters for the year 2025 in a few hours. So volumes are going to be low, and absolutely no trend will be available. Most of the moves, whatever, will be based on flows. And even in the rupee yesterday, some strength that was seen was on the back of MSCI rebalancing flow. So I think 90 being well protected, even market hesitant to push the dollar further higher in view of the year end and also possible presence of RBI at those levels. Market just slightly took a turn for the better in the rupee towards 89.75, and that could well be the case today as well. And even the flows could trickle down to very low levels today and even tomorrow, when most of the markets will be closed, but India will be working. That's a very strange scenario. But then officially we'll be open, but I don't think there'll be any much participation even in the rupee tomorrow, unless there is some unexpected big event that happens. But in the rupee, also just taking a focus on the government statement yesterday, which said that India has surpassed Japan to become the world's fourth largest economy, and is poised to displace Germany from third rank in the next 2 to 3 years as well. So that's a assessment of the government, and of course, there's still not I would say a confirmed news, but that's the initial statement of the government, which should be slightly a positive boost. And then also we see that the government will be pursuing a reform agenda in the coming years, and highest level of the government, Mr. Modi, Prime Minister himself, attended a meeting with economists and sectoral experts yesterday, to calling for mission mode revamp across diverse sectors to sustain India's long-term growth. And so a lot of focus again now coming back on the budget, which is just a month away. So we are, I think, possibly in a pause mode as far as the markets in India are concerned, at least on a pause mode, if not strengthening phase. Anticipation of budget will be one big thing, and then to see whether FIIs return to India, that's another. And third is whether it much awaited trade deal with the US, that is a partial trade deal, would happen in the coming days. These are the expectations with which we enter the year 2026 on the markets. And of course, specifically on the rupee, I mean, if I have to tell where we could be in the coming year, initial moves could be slightly to weaken the rupee, but then market will not push it too far. But if I had to put a rough range, I think 94 on the upside and perhaps 87 on the downside could cover it. In fact, I think even 88 would be a very big level, if at all, to break. And 94 is because, even if you take an average depreciation of 3 to 4% in a year, which has been happening from the current level, we will be around 94. So that should cover. I mean, it's a very broad range, no doubt, but then we will also update it as and when things evolve. Yes, as you said, FOMC minutes, yes, did indicate that uh, the uh, members were quite circumspect because there was no updated data available on the economy. But then the decision itself seemed to be a much closer call than the 9-3 vote that we saw on the FOMC day. And those who supported lowering the rate at the meeting indicated that decision was finely balanced, and they could have supported keeping the rate unchanged also. But eventually it came into a 0.25% cut. Now, if you look at the Fed Watch tool in the CME, we have no change expected for January, but in March, slightly more than 50% probability of 0.25% rate cut that we are seeing. The dollar index seems like it's been in a range, and the range may continue. Focus will be on Japanese yen, which is trading much weaker despite the rate hike, and the focus will be in Japan on how their yields move and the fiscal, concerns on the economy, which may also reflect in the currency. So that's one thing. On the euro dollar, once again, it has failed to break the 1.18. But then it's also well supported on the dips. So we see in the year whether the diversification of dollar benefits the US euro USD. Last year, euro USD did gain. That I would say is more more of a structural short covering. Uh, Gold also benefited a lot last year from the diversification. So this year we wait to see whether euro continues to benefit out of that. Interesting move has happened in yuan, which has now broken the 7 level. Now trades near 6.99, and even today's fixing at 7.0288 by the Chinese central bank was last seen only in September 2024. So it appears that the central bank is slightly aligned with some strength in the currency. But we'll have to watch whether they continue to allow the currency to move stronger in the new year as well. So on the Middle East also, some tensions are brewing. We have seen some attacks by Saudi Arabia on Yemen, but it seems to be kind of localized, not a very broader conflict. But then concerns more is on Iran-Israel matter, because they are currently under a fragile ceasefire, and recent statements both from Iran and US are quite strongly worded. Iran itself is facing a huge domestic problem. The currency, dinar has fallen to 1.42 million to the dollar. And just for a perspective, in 2015, it was trading at 32,000 to the dollar. And so the huge amount of impact on the economy due to sanctions. Inflation is currently at 42%. Public unrest is seen. So many times, domestic problems eventually also reflect in an external action also. So that's why the market is a bit circumspect on what's happening in the Middle East. However, we'll keep watching this situation, and see what happens next on the conflict. No doubt, focus will be on precious metals, particularly silver and gold, particularly silver, and to see whether the dream run that we have seen in the last year has more to go in the new year or not. Market still talks about shortage of physical supplies in silver and rising industrial demand. So that way, I think 2025 has been a volatile year. Rupee was distinctly weaker, uh, while dollar itself was also weaker against other currencies. Precious metals made very strong rally. Indian stocks were very subdued, not able to break into new years, even as many other markets made huge headway on the upside, particularly the US markets. They are all closing at almost at the new all-time highs. So hoping 2026 will bring more cheer to Indian markets. All the best for the new year. Thank you.
Thank you, Jayaram. So, and just to summarize, we expect a slow motion today in markets as we'll only maybe see certain negligible flows and not any major trend as most of the global countries have already closed their shops for the year. And we also had a statement from the Indian government yesterday saying that India has surpassed Japan to be the fourth largest economy in the world. And of course, this statement wasn't official, but it was put across. So it'll be interesting to see whether this actually plays out in the new year. And going into the new year of 2026, the expectations we enter with for the Indian economy and also USD INR is one being the trade deal between India and US, the awaited budget, and also to see whether the FIIs will enter back into the Indian markets. And based on this and the average depreciation for INR, we expect a range of 87 or 88 on the lower side and 94 on the higher side for the year. And when it comes to the Fed minutes, even though the call for the December meeting was a split vote of 9 to 3, it was closer than expected based on the statements that we saw last night. As the policymakers said that they would support a no change. And these were the policymakers who were in favor of a rate cut. And because of that, the Jan meeting probability now stands at about 15%. And the Chinese yuan has now broken the 7 level, and even the fixing today from the government was the lowest we've seen since September 2024. So it seems like also the government is in line for a slight currency appreciation. And the focus for the next year will be on the precious metals, as we'll have to see whether the a dream run of 2025 will continue in 2026, especially when it comes to silver. And just to note, the US markets will be on a shutdown tomorrow, so no outward payments will be processed. And that's it from us today. We wish you all a very happy new year for the year of 2026, hoping to see some strength from the Indian markets. And we'll catch up on Friday for a fresh round of updates. Thank you.